What is up, YouTube? This is the Working Investor. In this video, we're going to talk about a unique play with high yield dividend ETFs from Yieldmax and a play with earnings, and how you can use and manipulate these two plays together and combine them and make one big amazing play. Let's get into this video. So this video was inspired by the Oracle. He mentioned something that I actually was already doing prior, but he does it in a different type of scale. So, and we'll get into this. So let's talk about first the whole phenomena of earnings, of playing earnings. So let's call this line the earnings reporting right here, right? So before earnings reporting, there's sentiment and hype, and there are rumors, and the sentiment could be positive or negative, however people feel about it underlying. And then you go from subjective data to objective data. You get actually the factual numbers. And then there's a whole nother chapter called the reaction to it. Even if you have good earnings, you think that the stock would go up, but it can actually go down because if people expected a 10x return and you got a 9x return, that's, it all depends on managing expectations as well. So that's one phenomena that people play with the stocks. So let's say, you know, people, if let's say you get your dividends now in Yieldmax is staggered, and the earnings of different underlyings are different dates. But if you could find a Yieldmax fund that, let's say, has a dividend distribution before the earnings, let's say somewhere here in the timeline during the sentiment and hype and rumor window, right? And you're ideally looking for something that has a positive sentiment, that people are really pumping it up like crazy, you know, that everybody's talking about. Like when everybody's talking about NVIDIA, when, you know, the bartender was talking about NVIDIA and the cab driver was talking about NVIDIA and everybody was talking about NVIDIA right before earnings, you know that it's time to get out. But there's, they say, so basically you're in the rumor situation. So you get the dividends, and then you hope that the hype will bring the stock price up, that you recover almost all the drop in the price from the dividends, and you get out before the earnings reporting, before the reaction. So that's the strategy, and that's what, I know the Oracle has been doing it on Phoebe, which so far has been working out beautifully. Then there is something called, in the option world, volatility expansion. So because of the earnings report, it's a binary event. It could be good or it could be bad, right? Usually. And then there's the reaction to it. So, and then before that, there's all this sentiment and hype. So you'll notice with most underlyings, there's a lot of, volatility in the market as we get to earnings. And we call it vol expansion, volatility expansion. That there's something called expected move, and then there's the realized move. And the expected move is tremendous. People expect massive movements. Hence, even if let's say this horrible scribble is at the money, and far over here is pretty far, many strike prices away from the money, because usually you don't get much dividend over here, but because we're in a vol expansion area, there's the dividends are the option premium is a lot richer. Hence, I would imagine the dividends that the option-based ETFs provide from the option premiums would be fatter. And then as soon as you hit earnings, then there's something called contraction. It's like a big balloon that's deflated and now contracted. And now when you trade and sell options at the money, you get more premium. And then the further you go, it really goes down from there. So, I've actually been stuck in trades thinking, oh, I'm like 1 day to expiration. All this theta decay is supposed to like I can probably buy back the position really cheap. And that's a mistake that I made, because it's not just a theta decay. There's such high volatility that unfortunately, if like my expiration was like, there was earnings post market hours, and I wanted to close the position during market hours on a Friday before the weekend, but I couldn't because or if I wanted to, I had to pay a lot of money because there was still such a high volatility contraction until the earnings. And once the earnings report happened, everything went back to normal. So like, even though I was like, very close to expiration, I still couldn't, it's still very high, very rich. I digress. So, so basically, in a nutshell, this is what the strategy that the Oracle does. And it's a good strategy. I like it. I like people that think out of the box. You know, you get your dividends. It just should be hype. There's hype. Well, people get hyper, so I guess that's why there's hype slash pump. You get out, you de-risk your position, and then you can laugh at everybody at earnings. Whether it's good or bad, at least you got your money, you're out of the position. What I do is I actually sell options, is my little twist on it, which I'm selling options, cash secure puts on Misty. Do not copy me. Do not do what I do. Use your own common sense. You take your own risk. Speak to who you got to speak to. This is personally what I'm doing. I've been doing it already for a few weeks out already. Sold some positions in Misty, and I was trying to grow the position. And I thought to myself, listen, while I wait for declaration date, I can at least make some premium. If Misty goes down, I can get into Misty at a lower price, and I can get the dividends because the expiration is on the 18th of October. And and they only do once a month trading with Misty. But it happens to be that Misty's, I think, ex-dividend date is on the 25th. I mean, Misty pays out on the 25th, right? Misty right here, Group D, pays out on the 25th. So I can basically have a whole week still to hold the shares and then collect the dividend from MicroStrategy. And then I have a chance of, doing what step number one is, the hype, the pump, and hopefully recover some or almost everything and maybe get out or just stay there. It depends. But this is an interesting twist on a strategy. Let me know what you guys think. Again, if you're looking for the Oracle's video, I'll put a link to it. He has a bunch of videos on it. Anyways, this is the Working Investor over and out. I love learning from everybody. Everybody has interesting things they could bring to the table, and it's good to find value in everybody around in the community. This is the Working Investor over and out.